Asian markets continue to rally strongly in May, with the Nikkei Asia ex-Japan index up 6.5% in Australian dollar terms. In local currency terms, the index was up nearly 14%. Since March 2nd, the index has rallied incredibly strongly to nearly 50% in local currency terms. All individual markets in the region produced healthy returns. However, the standout was the Indian market, which surged nearly 35%. This was buoyed by the Indian national elections, with the ruling UPA coalition winning a decisive mandate in those Indian national elections. Hong Kong also produced a very good month, led by Hong Kong property stocks. We just believe that the current low rate interest environment, the weakening US dollar, and also the recent strong residential property sales are ensuring that Hong Kong property stocks are well sought by investors. Not to be outdone, the Chinese market continued its very impressive run since early March, gaining nearly 20% over the period. The latest economic releases from China appear consistent with a return to trend growth and further encouraging signs that domestic demand is accelerating. There's some incredibly encouraging signs out of China at the moment. Singapore, Taiwan, Philippines and Thailand also did well, while Korea lagged the rest of those markets slightly, but it's had a recent strong showing leading up to May. The portfolio performed strongly in May. It was ahead of the index by nearly 5%. Stock selection in Taiwan was a prime driver in the outperformance, with financials and real estate plays doing exceptionally well. In particular, we had one stock, Far Glory Land, which surged over 100% for the month. Hong Kong property stocks also had a strong month, and we were well positioned in this regard. Sinoland was the standout of our Hong Kong property. It rallied over 30%. Elsewhere, Chinese shipping company China COSCO, Indian property company DLF Limited, and the Philippine conglomerate SM Investments also delivered strong monthly gains. On the negative side, the portfolio was underweight the Indian market, as we didn't expect the market-friendly election result. However, we did have one stock, DLF Limited, which surged nearly 70%, which helped to offset the country underweight there. We were reasonably active during the month, mainly taking some profit in individual stocks that had run very hard over the past 3 months. We were most active in Asia, where we sold out of Asia Cement and reduced the portfolio positions in both Far Glory Land and Yuanta Financial, which have had particularly strong runs. The portfolio's current cash level has increased slightly after this period of profit taking, but we're looking to get this reinvested throughout June. The main areas our analysts are focusing their bottom-up research efforts on are in India, Indonesia, and also the technology sector, which has been off our radar over the past few years, but there's a few compelling ideas and opportunities that are presenting themselves there. After such a powerful rally since early March, a period of consolidation should be expected. We believe a pullback in the order of 5 to 10% is possible. We expect any correction to be brief, as there are too many investors holding too much cash in defensively positioned portfolios who are all waiting for an opportunity to buy. Our medium to longer term view on Asian equities remains bullish. We firmly believe Asia is in a period of structural outperformance over other global equity markets and are supported by far superior fundamentals than those markets.